हेलो फ्रेन्ड्स, नमस्कार। सबैजनालाई स्वागत छ मेरो च्यानलमा। आज हामी चाहिँ बैंक रिकन्सिलिएसन स्टेटमेन्ट भनेको के हो र एन्ड वाइ वी निड टु प्रिपेयर द बैंक रिकन्सिलिएसन स्टेटमेन्ट, त्यसको बारेमा हामी छलफल गर्नेछौँ र साथै एउटा एक्जाम्पल डिस्कस गर्नेछौँ साथीहरू। बेसिकली एज वी नो द्याट कि देयर आर सो मेनी रिजन जुन कि आवर record, I mean to say that company record, yeah, company books account, which may not the same as a bank statement. Yeah, you can say the passbook of the bank. So to balance that bank statement and our records, we have to prepare that reconciliation statement, which is called bank reconciliation statement, friends. Simply we can say that we try to reconcile between this is balance as per cash book, that is the company's account, while balance as per passbook, that is the bank statement. Basically we know the balance that is really available in the bank account, and third one भनेको that is all about to detect the errors or sometimes irregularities or the fraud or any mistakes in recording the banking transactions. So we try to ensure the correctness of the balance shown by the cash book and the passbook, for which we have to prepare bank reconciliation statement, friends. Now next one is that what may be the reason between cash book and the passbook are not the same. This region could be categorized as a like a deposit in transit. Deposit in transit means check under collections. For example, you send cash for depositing, but it has not been deposited in that your accounts in bank. So that is the case of deposit in transit. Because of these issues, what will happen to your cash book? Simply it will be, I'm talking about working note, it will be plus, while it has not been updated in the bank, so passbook will be minus. Since you have recorded it but it has not been updated in the bank, so as per bank statement we simply add the deposit in transit when you are correcting it, when you are preparing bank reconciliation statement. Simply other one is that outstanding check. Outstanding check means you have written the check for making payment to the supplier, for example, but check issued but not represented for the payment. Okay, that is called outstanding check. So what the company do, the simply in cash book, in working note you say cash book will be minus. Minus is the outflow, while passbook is the plus, because bank statement it has not been updated. So that is why what we do, balance as per bank statement we say deduct outstanding check, then same amount would be adjusted under the bank statement. Okay, now third one is that sometime amount credited by the bank directly, which is also known as the credit memoranda. For example, interest on term deposits, yeah, time deposits, dividend received, which are only credited in the bank statement. Only credited in bank statement means it has not been updated in the company's record. So in working note, what will happen to your passbook? Passbook plus, cash book minus. That means bank updated while it has not been updated in the company's book account. So under the company's account, yeah, balance as per cash book, what we do, we say add amount credited, whether that is the interest on bank balance, yeah, time deposits, yeah, whatever the collections made by the banks on the behalf of the customer, that is the example of credit memoranda. Now what about the debit memoranda? Sometime you know that bank charges the service charges is there. like electronic fund transfer is there. We make a payment through the bank, but these are only recorded in, yeah, debited in the bank means bank statement, passbook minus, but it has not been updated in our account. So cash book will be plus. Since it has been updated in the bank statement, so balance as per cash book we do less debit memoranda or whatever the service charges under that title. Even this will happen to the not sufficient fund also. Not sufficient fund means, for example, some customer provide you the check. You receive the check, then as an accountant, you simply update your cash book as a plus. But when you reach to the bank, you came to know that the cost in customer account, because of lacking of sufficient fund, the check did not case. So passbook will be the plus. But when you are correcting it, then what we do? Simply under the company record, you can say that less NSF check, not sufficient fund check. And lastly, we adjust the error. If there is a bank error, you adjust in the bank statement. If there is company error, you adjust in the company record. Okay. But important point is that, friends, when you prepare the bank reconciliation statement, this adjusted, I mean to say that this adjusted, yeah, corrected balance as per bank statement, this figure, and this figure means I am talking about this one, and adjusted corrected balance as per company books, that is this amount needs to be same, friends. Okay. This way you could check your accuracy while preparing the bank reconciliation statement. Now next one is that, let's move to the one example. Simply you are given some figure, based on this information you are asked to prepare the bank reconciliation statement. Here on this date the bank statement indicated that the cash balance, see, this is the amount balance as per cash book, I mean to say that, while this is the bank statement data, that is the bank statement figure is that balance as per bank statement. Okay, this is the important, don't be confused as a cash balance since this is the bank statement record. So this is the balance as per bank statement. Yeah, you can say that passbook this is. Okay. Now next one is that cash ledger accounts on that date, we have this 7,430. So you say that balance as per company is 7,430. Okay. Now as I discussed earlier the concept, that is the outstanding check, check issued but not represented for the payment. Okay. Now check issued but not represented for payment, this is the working note, by the way. CB is the cash book, this is the passbook. Since you record it, company record, but it has not been updated in the passbook, so we say less outstanding check. Now this is the 500 check mailed to the bank for deposit, had not reached the bank at that statement date. So this is the deposit in transit. You have updated, but it has not been updated in the bank. That is the passbook. So deposit in transit add. And the third one is that the bank return or customer NSF bounce, we say bounce check of 225 received as a payment of account receivable. Some customer pay that amount, you collect it. So in working note what we will do, simply cash book for NSF check, I mean to say that NSF check is the bank return a customer check. In a working note we say that cash book plus, since you received the check, while in passbook it has not been updated. Reason is that customers may not have a sufficient balance, so the bank, this check has been bounced. So when you are adjusting it, company record, then look at the passbook. So this is the minus, then you can say that this is the NSF check 225. Now the bank statement showed the 30 as a interest earned on the bank, that is the D number. D number is all about interest on the bank balance, I mean to say that. Okay. So D is all about when you receive the, that means this is the example of credit memoranda. Bank statement, simply it has been updated in the passbook, but it has not been updated in the cash book. So as per balance, as per company record, what we do, that's 30 is the as a interest earned on the bank balance, so we just add it. Okay, this is the working note. Simply the working note you could provide just below the bank reconciliation statement. Okay, that is the 30. Now other one is that check 781 for the supplies clear the bank to 68, but it was wrongly recorded in our book, that means company record as a 240. It is under, this is the, simply it should be 268, but actually you have written as company written as a 240. So E number is all about simply that E is the you record under payment case. So cash book under recorded, so is the plus, this is the minus. So you record it, when you correct it, that is why we say that that difference is known as 28. So this is the 28. Now last one is that this 486 deposit by the Acme company was the bank did a mistake, so this is the bank error. Okay, so bank error is that in cash book this is minus, since the bank recorded wrongly. So but when you are adjusting it, I mean to say that this is the less bank error 486. So my point is that when you prepare the bank reconciliation statement, this is the balance as per bank statement, and this is the balance as for company's book. This both amount needs to be same, and that shows that your calculation is right. Otherwise you have to again revisit your questions and solution as well. Now next one is that sometime you may be asked to prepare the journal entry also, that is journal entry is on this date cash account debit to interest revenue 30, and next one is that supplies inventory, that's this is 28, and account receivable 225, 25 this one NSF check. So this is the 253. You can simply prepare the compounded entry at a time. Okay friends, basically we prepared your bank reconciliation statement to reconcile the statement between the balance as per bank statement and the cash book, friends. Okay, if there is no differences, then there is no question of preparing the BRS. So at first you have to understand the reasons for the disagreement between these two book, company book and the bank statement. So you could prepare bank reconciliation statement, and then you could also prepare adjusting entry also, friend. Okay, these are the things that I would like to share today, friends. If you like this content, please like, subscribe, and don't forget to share this channel. Thank you all of you for watching this video. Please take care.